All right, good morning, everybody. Sorry for the slightly delayed start here this AM. Had a few issues with my internet router I had to sort out. So hopefully everything looks okay here this morning, no issues. And we're doing well, right? Feeling recharged, refreshed, and ready to go here today for what should hopefully be an interesting trading session. A few things, right, for us to kind of talk about here before we get going. So first things first, right, we've got a slightly busier economic calendar here today, right? We've got consumer confidence and job openings here at 10. And then just sanity check here. Yeah, that's fine. So certainly a little bit of a busier market, right? Potentially from that context. And then we obviously have earnings season kicking off here in earnest this morning. This afternoon. And that should definitely create a little bit of volatility for us to take advantage of here from a market perspective. So today, right, primary element, make sure that we don't get caught up in too much chop, establish really strong volume profiles, and then really just keep kind of focusing on good execution timing, keeping our analysis of the market objective, and emphasizing the quality of our processes, not the quality of our P&L. When our processes are good, when our entry timing is sharp, when we're objective over the reaction over how price action behaves post-entry, then we generally set ourselves up to be successful, and we put ourselves in situations where it's easy to be green. Right now, right, we're on a base hit market. So it's, small green days are certainly stacking up, and they're compounding and turning into a relatively nice run of form here. And I think it's been 12 consecutive green days here at this moment. So it's not to suggest that a red day here is coming or anything along those lines, but it's understanding that I can't allow myself to trick myself into thinking that, hey, today's a good day to go double sizing. Hey, today's a good day to rush my entry timing. Hey, today's a good day to ignore my stop loss, because those are the things that are consistently proven to not make me profitable. And if I kind of fall for that BS and trick myself into thinking that this time is different, then I certainly don't stand an opportunity or don't have a chance, right, of creating what I'm looking for here from a kind of results standpoint. I was thinking about this a little bit also this morning, right? But the difference between a profitable trader and an unprofitable trader is an unprofitable trader has failed once, right? And they've made this big decision to go all in on a single trade, or they average down, or they ignore their stop loss, or they do whatever, and they're unable to survive that one failure. A profitable trader is someone who has survived thousands of many little failures, right? Where they have lost in control, where they have survived their mistakes, where they have learned from some of their pain points. And so success in the market is on the other side, right, of thousands of little failures, and embracing that mindset, almost gamifying that mindset, will make you a lot more successful than deciding that this is going to be the trade that I have to make my money on. And less all in we can be on a decision by decision basis, the more all in we can be on a month to month, year to year, quarter to quarter basis, and the sooner we're actually going to get the objective, right, and the result that we're looking for. So with that being said, team, rant out of the way here this morning. Let's map things out. Let's figure out what we want to do here this AM, and let's put ourselves in a situation where we can have ourselves a strong session. So good morning, Stephen, Rain, Cordell, Tanja, Jeff, Patrick, Ruben, Joe, Brian, Samuel, Juan, Joe, James, Salstein, Dustin, Mike, Bugs, Craig, Don, Nate, Suresh, Kenneth, Anthony, and Herschel. Hope you're all having yourselves a fantastic AM. I want everyone to wish Craig a happy 1-year anniversary. He's been with the team for about a year here now. So appreciated that email there yesterday, Craig. And let's kick off and take that next step here going forward. So first things first here, team. What's the count here on ES? Let's start there. And yeah, let's go from there. Yeah, inside bar jack spot on. Hey, welcome, welcome. So inside bar, right, means we're looking for a breakout or breakdown in either direction. And in general, right, we need bigger volume than what we saw there yesterday. So dip buy off of 5,800 certainly still continues to make a little bit of sense, right? That would be that sort of area there. We have maybe a little bit of a trend line here to the downside. So we'll see if this thing can break down. Maybe, yeah, I don't think these plans really need to change. The only difference, right, is basically the levels that we're looking at here for the downside. So we're at 851 here pre-market. Breakdown through 850 should give us that red lines, right? These red lines on the shorter time frames should be on the, we'll call it probably 840 area, right? That kind of range. And then we have it mapped out from there, 50, 60 points. So, okay, fine. To the upside, we're targeting, I don't really see too much changing here either. Call it 5880, 5890, right? And then etc. So again, we're going to look for that resolution here, but not too much changing over the last couple days. All right, NQ, what's the count? Yeah, same narrative here, spot on. Day of consolidation inside a quote-unquote pattern, right? So we think maybe a little bit of a period here where we're looking for that breakout. We've got kind of a huge, call it a chunk, right, of tech earnings here reporting today, tomorrow, Thursday. So maybe that's going to be that catalyst here for us going forward. Market very much like we talked about there yesterday, where we're in a period of mass uncertainty, right, with tech earnings, with the election looming. And so it's going to be kind of like micro trends here, right? One day up, one day down, one day up, one day down type thing. So we're going to see if we get a clear breakout here or clear breakdown. I mean, a dip buy off of that green box certainly continues to be a scenario here. We highlighted that yesterday, how basically since the start of October, we pretty much just have evidence of dip buyers inside that area versus rejections. So not too much changing. We're targeting 2,600 instead 2,700 as our starting level. And then to the downside here, right, we'll go rejection off of 27. And we're targeting 24, 2250, 22, 21. And we can go down towards like 20,000. Cool. All right, crude. What's the count here? Right, 3 for 3 here to the downside. Big red candle, increasing outlier volume, right? And then red price action here so far today. So all three elements are telling us that bears are in control. The main thing here that one would be concerned about, right, is we're opening up in the implied middle. Hey, good morning, Jed. So it is setting up as an inside bar, right? Good morning, Constantine. So we're looking for a breakdown here under, we'll call it 67, right? Maybe you have a gap fill set up here short term, but because it's a 3 for 3, we're going to go NA for a bull case. Get stuffed at 69. Nice. And then we're looking for a breakdown under 67, right? So 67, 66.50, yada, yada, yada. Not too much is changing there. But let's see if we can get some good momentum. Again, crude might be a little bit more challenging for us to trade, right? Opening up in the implied middle. So we maybe seem like we're a little bit easier for us to get a resolution here on the index level versus on the commodity level here this morning. Okay. Apple earnings Thursday, right? So that's a head honcho here. Green candle, decreasing volume, gap down. So 1 for 3. To the upside, and kind of looks like a trend line rejection, right? If we're extending this thing out. So a high vol breakdown here under 231 certainly would make some sense. And then still looking for basically a breakout above this high, right? Where we've gotten stuck. Maybe that's going to need an earnings catalyst, right? For us to get up and over through that range. But certainly what I would be looking for here this morning. Okay. Tesla, higher high, higher low, decreasing volume, gap up, red candle. So again, 1 for 3 here to the downside. Non-trending PA, essentially what that's telling us. So we're looking for a 273 breakout here at this point. And then to the downside, right, still needs to get under 243. So that's got a ways to go. I have no interest into selling into that post-earnings volume. I don't like swimming upstream pretty much, right? So that would be what that equivalent is if I was a salmon. So not going to do that. Going to look for more continuation than to swim against the current. And we'll see if we can get ourselves a clean bit of price action, but it seems like it might be a day or two away. Okay. Microsoft, technically a lower low, lower high. Earnings on Wednesday. Maybe that's like the trend line support there. Maybe you have like a little bit even of like a rising wedge like that. So if that's the case, right, you need to lose that trend line. We'll call it under 426 or a breakout above 433. Again, going into earnings here tomorrow. Not super enthusiastic to trade this. Probably get more of a positioning trade than a trend trade. And the positioning trade's more random than it is predictable. So I'd rather be patient. All right, inside bar here on Amazon. So still looking for a breakout here. Good morning, SG. And then not too much changing. Okay, AMD. We've got earnings here today, post-market. 3 for 3 here to the upside. So I'm going to wait for earnings, right? And we're looking for, call it a 162 breakout here this morning. Generally and I don't want anyone placing any money on this, as it's not back tested, but generally my feeling is when it runs up before earnings, that's a reason to sell the earnings report. When it dumps before earnings, that's a reason to buy going into it. So possibly a bit of a run-up day here, which would be good for the indexes, but probably bearish, right, for AMD's earnings. Okay, NVIDIA, 2 out of 3 here to the downside without volume. Yeah, it's like the, I don't know, they're trying to FOMO you into chasing a bad earnings report they can sell into you. So still looking for a 145 or a 137.50. Maybe we go 139 here maybe, or 138.50 instead of 137.50 at this point. In reality, with something like an AMD as well here today, if you're going to play that with options, The only one who's going to win are going to be the premium sellers, unless something crazy happens here, right? So I don't know what the implied move is in the option chain. I can take a look a little bit later, but I would anticipate that to be a little bit of a psychopath here this morning. Okay, Meta, 2 out of 3 here to the downside without volume. Higher high, higher low. So some bullish characteristics. Opening up in the implied middle at trendline resistance. So still want to see that trendline breakout. Another trendline rejection could be in play here again. Earnings on Wednesday. Man, Wednesday's going to be a big day. So let's see how this thing plays out. Looks like it's going to be chilling here. Okay, Netflix. Technically a 2 out of 3 to the downside with volume. It's like barely increasing, right? Couple hundred shares. Still looks stuck, right? Maybe this is now starting to become like a little bit of a trend line. Maybe like a bit of a wedge, right? So 2 out of 3 to the downside with volume, fine. Still needs to break down into that gap if we're going to be bearish. Otherwise needs to break out now above maybe 769. Nice. Clearly a child here. All right. And then Google earnings again today after close. Higher high, higher low. Gross looking candle. We'll call it a week. And then VIX hanging out, last thing, right? VIX hanging out here at 20.19. So increase of volatility relative to yesterday. Yesterday we opened up at 1911, if I remember correctly. So we're up, you know, about a point and a little bit above that range. So definitely some increasing in volatility here today. We'll see if that gives us a tradable range to deal with, right? Last couple days, I mean, if we look at even just the last 1, 2, 3, 4, 5, 6, 7, 8 days here in a row, it's more wicks than not, right? It haven't been very many full-bodied candles. Hasn't been really much extension of a range. If we look at it from like a monthly perspective, we're very compressed here so far. Doji on the month. So we're definitely being rewarded for being cautious here. And this is not a market where we want to be hyper aggressive until proven otherwise. What we also want to remember, right, in conditions like this is going to be choppy, right? And because markets are choppy, it's going to feel as if you want to go bigger stop losses to give yourself more breathing room. But that is not the right thing to do, right? The same way as if you can look at your, I think I saw Mark Minervani tweet this, but you can look at a lottery ticket and say, oh my gosh, if I played 23, 17, 47, 85, and 62, I would have won the lottery ticket. It's the same way with your trades. Oh, if I just placed my stop loss 10 points lower than I normally would have, I would have been profitable on that trade. Allowing ourselves to think that way is a form of delusion that honestly just does not make you any money here long term. So we set our stop losses at the point where we think we're invalidated. If we're invalidated and we take a loss, okay, I'm going to take the hit, right? I'm going to be okay taking that number. If I don't like the size of that loss, then I'm either going to size down, wait for a deeper pullback, or not take that trade. But I'm not going to change my technique here dramatically to make myself feel as if I have a greater probability of actually making money on a trading decision. That for me is illogical, something that doesn't make any sense, and I'm not going to change my definitions here today just to give myself a chance at bigger follow through. I'm going to swing for my base hits. It's what I always do. It's creating a nice outcome for me here in the last 12 days or so. And if I get on base, awesome. I'll keep compounding away. If I, catch a nice market, I can get some follow through, awesome, right? That is also going to be a very positive outcome here this morning. So no rushing, no forcing, no doing anything stupid. If I have to sit on hands, I have to sit on hands. If I get a nice tradable opportunity, I get a nice tradable opportunity. I am not going to make the market feel personal here today just because I'm craving action. So any questions here, team? If I were to say that the market is giving us a general theme, how would we feel about that general theme here today? Yeah, bearish, but also as if we're looking for a consolidation breakout, right? So many of our names there are giving us indications, like Jack is saying, of kind of like choppy price action. And so we want to make sure that we see some sort of form of proven otherwise prior to us being very aggressive here this morning. So yes, we have a chance to get a little bit of a bearish breakdown, but base expectation is that it's chop until proven otherwise. And we're not going to front run that narrative until we have a consistent narrative right across the board and we see clean price action here today. So that's the plan here this morning, team. We got 3 minutes or so until market open. So I'm just going to go make myself a cup of coffee, spend a few minutes here visualizing a successful trading day, and then we'll jump back on here and do a quick little run up as we creep up. And yeah, that makes sense, Suresh, right? Because tech names so far have done or held up relatively well post our initial earnings, right? So we're seeing tech seem to drive markets higher a little bit. And so it makes sense that there's like that divergence that's driven by those earnings. All right, guys, we'll be back in a minute or two here, and then we'll do a quick little rundown as the session is starting. right, and then just as like a final piece here this AM, right, before we start placing any trades, details are going to be exceptionally important here today, right? So I don't want to see any operational issues. I don't want to see any, failed stop losses or incorrect order windows or anything along those lines. We have more than enough time before we ever place a trade to make sure that those details are sharp and behaving how we expect them to behave before we place. So double check, right? Your I's are dotted, right? And your T's are crossed, and make sure that you're happy with the amount of risk that you're taking on here before you place any trades. Make sense, team? Fair? All right, good. Okay, good opening volume here so far, right? All things considered. ES probably looking a little bit more aggressive than NQ. And crude looking like a dip buy here so far. But again, right, we're still very much in the implied middle of yesterday's range. So no reason to be aggressive yet. And we actually might be quite a bit lower than yesterday on NQ. 22 spot, what is that? 207. You're close. So let's see how it shapes up here. And remember, right, we've got 10 a.m. data here this morning. So generally, right, when we've got a choppy market and 10 a.m. data, things tend to want to take a little bit longer to develop. So it might just mean a slightly slower start here to the session. Just lower volume. We have to wait for this on the 5. And Q as well, right? 11 spot 4 versus 12 spot 3. So again, we don't have the volume standards that we're looking for here on the 3-min time frame. So let's be cautious. Okay, so ES getting there. ES should give us an increasing volume standard on the 5. And Q unlikely. So this might be more of our bias here this AM. Tell you what, the coffee is strong, the weather is cold. Not sure how I feel about that here. So 36 versus 34 on the 5. Decent size range, right? 12.5 points. We've got pretty good targets to go after. And Q 15 spot 6 versus 16 spot 8, so no dice. And then crude, we don't necessarily need more volume than what we saw there yesterday, but smaller range than what we got there at the open. And yeah, we'll see if this thing plays out again, right? We're kind of expecting crude to be a little bit of chop city here today until we get that clean resolution. So let's see. And then obviously ES might just be a little bit slower here, or slightly longer developing setups until we get clean price action. So no rush here immediately, right? We're 5 minutes into the market, and already from like a base expectations level, I know I'm probably 10 minutes away, right? At like a bare minimum of getting a trade here this morning. So I don't need to be in a rush. It's got to be willing to basically hold that element of control here over not only expectations, but over like making sure I don't get that like out of body experience, right? We've talked about this in the past, but when I'm willing to start to rush decisions, then I start to compound the mistakes in my trades. So if I like front run an entry here to the downside at 58.42, which is obviously not something I'm going to do, all I set myself up for is that if I actually do get lucky and get that downside follow through, I'm going to close that trade early, right? I'm going to close that position before it ever really pays me out and gives me that oomph, because I made the mistake of, yeah, basically breaking my rules, right? So subconsciously, I know that, hey, because I broke one of my execution rules before, because I did X, because I did Y, I'm now more likely to not be able to trust that my thesis is actually correct, because I know subconsciously, right, that there's an element of luck of being able to get that sustained oomph so far. So I'm unwilling to rush that decision. I'd rather just eat the disgusting amount of Halloween candy I've ordered here instead of yeah, putting my money into the market here so far. Does that make sense? So primary focus, right, always control the variables you can control. And that also very much means, right, control the expectations you place on yourself on a day-to-day basis. Right, so I know base expectations wise, although this might be breaking down here right now, this is not exactly the price action I'm looking for. So instead of rushing this and feeling, oh my gosh, I'm going to miss this move, I feel no stress, pressure, anxiety, right? Desire even to place a trade here, because I know if I chase this price action without it being exactly what I want, all I'm setting myself up for is to lose long term. Maybe not a loss today. I mean, I'd be up 3 points, right, on that 42 entry. But then, is breaking my rules to make $150 really worth it? No, probably not. So from like a personal perspective, right, that risk reward is very skewed. And if it means I have to be quiet, then I have to come up with silly jokes and do all that kind of stuff, then cool. I'm happy to do that as well. Even when I worked institutionally, right, there would be quiet days, inevitably, and those would be days you fill out paperwork or trade reports, or you get harassed by your boss for doing something stupid. But then in between those times when you're procrastinating, doing all of that work, you know, we'd be betting on who can throw an M&M into the trash can from the furthest away. How many marshmallows can Bilal fit in his mouth? Who can do the most push-ups, right? You just find little ways of entertaining yourself without having to have any action in the market. And so no desire here, right, to force anything until it's perfect, right? Hey, congratulations, Jeremy. You've not missed much here yet so far. Maybe have something setting up slowly but surely on the old ES. But we need a significant amount of volume before that's in play. And pretty much no NQ here by the looks of it this morning as well. All right, so maybe a little bit of a fake out lower here at this point. And then maybe crude as well. Now testing towards previous day's low. Yeah, we would need to see, I mean, if it goes bullish engulfing, candle bullish engulfing on volume on that little fake out lower, could be in play. But 3 min, not good enough volume. 1 min. It's a little bit of a pullback after touching its 2R range. But not interested in that yet. So I got some work to do here. And if we're going to be objective, right? And we said, okay, today, slight either bearish bias or chop bias, right? As we creep up towards that news narrative, right? Tons of tech earnings here after market close today and tomorrow and Thursday. This kind of feels like this is a market that's waiting for something. Now, that initial resolution, right, could be that 10 a.m. data, job openings, whatever. And maybe that gives us a little bit of some oomph. But short term, we don't need to basically like hyper focus, zoom in on this so much that we forget all the context, right, that we planned out. It's almost like we need to force ourselves to delay that gratification. So again, this looks like it's going to be a good looking candle, but not on a significant enough volume profile for us to call that a reversal. NQ as well, right? Decreasing volume standard. CL, right? Decreasing volume standard. So we're seeing a pretty slow reaction here to start the day off. And with that, sit on hands, right? Sit on hands. Now, if we can get that high vol breakout here now through the opening range high, cool. We're in good shape. But again, no rush here. And NQ, although maybe a little bit of a bigger move here so far, very unappealing, right? Just because that volume profile on those longer time frames, it's all decreasing, right? So if yesterday was already a low volume day and we're at a lower pace than what we saw, if we're calling ourselves a momentum trader, which is what I would fundamentally call myself, not a scalper, but a momentum trader, certainly seems like we have a lack of momentum, right, going into open on most tech names. Because things up like 20% in the last couple days. Pretty impressive. I think I saw somewhere that DJT is now worth more than Twitter or more than X, which doesn't make too much sense to me, but what do I know? In general, it feels like betting markets, stock market, you know, some of those like Trump leading indicators are pricing in a Trump victory. If everything is so certain, that almost makes me feel like the opposite's the most likely to happen. Or that if we do get a Trump win, it'll be a dump scenario. Yeah, Trump and dump. Yeah, I like that. That's good. I'd love to know how my old fund is positioned for this. They would not tell me, unfortunately, but I'd love to know. They always crushed political trading. The fund owner had like a his own like polling company, political polling company, and yeah, definitely had the algos turned on to that information. Yeah, well, halts just crush liquidity, right? And there's, I mean, that's why I don't trade small caps. There's no worse feeling, I think, as a small cap day trader than to get caught on a halt or to get called on an offering. Like, those intraday offerings are disgusting. All right, so maybe getting a little bit of a rejection scenario here. 950, that 842 entry we speculated about, right? Still offside. So again, breaking your rules to chase something never pays you out. Okay, so possibly have a little rejection scenario here setting up on ES. Stop loss, realistically, would prefer to have it just as high of day. Now, 950, so we got 10 minutes here till data drops. 6-point stop loss, maybe a little bit aggressive, right? 6 times 50 would be $300. So let's start to watch this here. So stop loss of 53. Again, this would be a 1-unit play. And even at this price, right, you're not getting the risky management you want. So you still need to see a deeper pullback than this. Uh, 51.25 stop loss could potentially work. But it seems so logical that you would see bears defend high of day versus the high of our confirmation candle. If it's like a 1.5 difference, I would rather default to being more conservative than more aggressive. Yeah, it's pretty wild, Ace Rush. Okay, let's keep watching here. Okay, so still watching here. Well, not a great reaction as of yet, right? Okay, this 48.50 could now be 2 contracts. But again, still not giving me the right oomph, right, that I would like. It's been kind of a grind in both directions without really seeing bears stepping in and defending this upper end of this range. Not sure why that was such a tongue twister all of a sudden. And if things are moving this slow, kind of makes it feel as if might be running out of time prior to the 10 a.m. data, right? So again, no reason to rush into this here yet. We're looking for that correct reaction, not just, oh, okay, this feels like it's going to go is not enough. Again, with this slow defense from bears, right? If I'm thinking before I enter a trade, what does strong bearish reaction look like? Or what does strong bearish price action look like? It's hard to argue that I've actually gotten that look here yet. So if I haven't gotten that look, and we've gotten some bearish signals, maybe what that's starting to tell me, right, is that the most likely outcome here is a red to green reversal on 10 a.m. data. Right? Because if bears aren't enthusiastic after establishing 2 relatively strong volume profiles, and they keep kind of like, we'll call it trick-or-treating with our thesis, and it makes it hard to want to trust. So again, I think we did a good job identifying high of day as a potential stop loss, right? That was definitely the right call here. But we haven't seen that be defended with any aggression here, right? It's kind of... yeah, it's kind of finding it easy around these highs. So being very patient here. I'm going to stop using the word patient. Being very stubborn. Because I don't think I'm being patient with my entries. I'm being stubborn, waiting for things to be perfect or the way that I want. Okay. So again, just would have made a new high a day there. I'm going to say no interest now until data drops in 4 minutes. So we're going to wait this out, team. We'll see how it goes. Maybe we have a chance to go increasing volume here on the 5, and then we can play that red to green reversal. So wait it out for the next 3 minutes. Let's see how it goes. A lot of work to do before it hits all-time highs here. We shall see. I know there's a bunch of people that use their cell phones for executions, so they are out there. I'm personally not one of them, but teach their own. Okay, let's see if this thing can go increasing volume. It'll be close. Ooh. Right, so now watch this algo reaction here. There we go. Woo. Kaboom. So just decreasing volume on that previous candle. quite the algo push. Let's see if this thing now can close as an increasing vol standard. No dice yet. And again, if it now gives me a rejection here at these highs, cool, right? We've got a good risk-reward range we could map out. But we've done a good job here avoiding basically whipsaw price action so far. And I know many traders, especially when they're kind of trying to find their edge, right? Figure out what they're good at, what they're bad at. They have a desire to place more trades than they need to trade, right? They have a desire to kind of overtrade and actually degrade their edge. But I want you all to think about trading as being a job, right? And with any job, unless you're like, I mean, I've never been a pro athlete, but I imagine even if you're playing in the NFL, there's probably plays where you're like, oh, this is boring. I got to run block again, right? Whatever it is. And so there are always going to be boring times when we're trading, right? We can't allow the market to turn into our level of entertainment or our main source of entertainment. That ends up becoming a trap. So what we want to focus on here, right, is basically not rewarding those dopamine systems, right? Because I realize that day trading is more fun than pretty much everyone's day job. It's an incredible feeling, right? But we can't allow the feeling of having risk on to trick us basically into losing money. So that would be unacceptable from my perspective, right? Because I don't trade for entertainment, even though it is fun, even though it is the favorite thing I do. I trade to make money. I trade to create an income or a life for myself that I wouldn't be able to get doing pretty much anything else. And so if I believe that that is actually the reality, then I can't trick myself into making decisions based on wanting to feel entertained, right? So the way I almost talk about this to myself here consistently is that I choose to be disciplined in my trading so that I can basically be undisciplined in every other element of my life, right? So I choose to be disciplined as a trader because then I can, I don't know, do that impulse vacation, right? I choose to be disciplined as a trader because then I can make that purchase without having to think twice about it. I choose to be disciplined as a trader so that I can basically pass on all of those other burdens. And if I have to suffer for 90 minutes to create freedom in the next 22 and a half hours, that for me, right, is a fantastic trade-off and one I'm willing to accept and stomach, right, on a day-to-day basis. And that's a commitment that we should all make with ourselves. Is that, hey, I'm not trading to feel as if I have a chance to make money. I'm trading because I'm executing my edge so I can make money. And executing an edge is a lot less boring, or a lot more boring, sorry, right, than just like picking a horse and hoping it runs fast, right? So now we're starting to look for ES here to the upside. That red to green reversal we talked about, right? That being the possible scenario on that weak bearish defense. Certainly seems to be a bit more in play here. So starting to watch ES here to the upside. And again, right, we're ignoring NQ here today because it's not giving me the opening volume standard that we defined, right, or that we need on an inside bar day. So we're not getting more volume than what we saw there yesterday. On ES, we are. On NQ, we aren't. Okay, so we'd like to see it either pull back here into previous high a day, right, so 54.25, or give us a nice breakout here And maybe you're looking at 2 contracts. So we want to see elevator up above 61 and then a slow pullback into 60.25. So now bull case scenario, 855 stop loss. Maybe you could do 825, 855.25. I'll just go 855. Allow the spread to cross. And then we know, right, entry has to be 60.25, 60.50 or better. And we need to see a high vol or a enthusiastic breakout above 61. And if it doesn't happen on this candle, no worries. If it's like an inside bar setup, no worries. We can then try to set it up again. Maybe it'll give me a 10-min signal, right? We've got increasing volume on the 10-min. So there's no rush here. An entry at 58.60.50 would be risking $262 per contract. All right, $262.50 per contract. So I could go 2 contracts here on an entry of $260.25, right? Or better. So realistically, that's what I'm going to wait for if I can get that breakout first. And then if we can get this thing to be a little inside bar breakout, then maybe I can get even tighter risk and size up even more. But for now, right, primary focus, define the risk I have before I ever enter a trade. And be unwilling to accept something that is worse than that. Now, alternatively, right, we could go stop loss 47.75. But this is a huge stop loss, right? Like this is 8 points, 7.5 points. So that's more risk, right, than maybe is justifiable. I could buy 1 contract with that. But I'm not sure if it's worth 1 contract. So best case scenario here at this point, right? Probably an inside bar breakout. So close this candle in the upper half of this previous confirmation candle's range. And then get a breakout, right? We have our stop loss at like 58, 57, right? Something along those lines. So again, still being very patient here, right? We got 20 seconds to go approximately on this candle. That little inside bar setup seems to be the most likely at this point. Like to see it close up a little bit higher here, right? Closer towards that 57. So I want to get tighter risk here, right? That's the objective. Maybe not giving me that opportunity. What's nice so far, right, at least, is that the previous high of the morning is acting as support, right? So that 20, 854.25. We seem to keep bouncing off of that approximate area. So if I'm looking at, hey, what's a strong bullish reaction? I'd probably argue that is one, right? That's a relatively good sign, right? Previous area of resistance now acting as support. So we're still going to keep that 855 as our stop loss. So again, not too much changing from a position sizing perspective. So stop loss, right, still would be 55, right? Entry 60 or better. And I'm not front running this, right, until I get that breakout above previous high of day. So I want to basically see the reaction we got here right at 9:55 to occur again here at 9 or 10:11. Right? So breakout here now above high of day, approximately 61, and then a slow pullback into around 60. And we have a chance. So watching closely here. Okay, so there's that elevator breakout above. Let's see if we can get a slow pullback here now. All right, sweet. So I am in average price 58.60. Ooh. Okay, maybe not the perfect entry here. Okay, so see if this thing can give me a slightly stronger reaction than what it has been here so far. It's a good entry, Mike. Very good entry. Should go increasing volume here on this candle, but I'd like to see it close up above previous high a day. So 1.5 or 1.25 away. So down $100 right now. Still a higher high, still a higher low. So we do have some bullish characteristics here. But I would not say that that was a great entry price. Okay, it's got to fly here. Come on. So needs to just give me some separation now here aggressively. Otherwise, I will take this and run. Right? If I'm a little bit paranoid about my same thesis we had yesterday, right? If entry timing isn't perfect, then I don't want to get too pot committed to a trade that isn't behaving how I expect, right? So let's see. It's been a pretty, I mean, it absorbed those lows pretty well, but absorbed those lows without giving me separation higher. And then again, got stuffed right at 60 again. Fair enough, Oz. If you're holding on to that baggage, though, you're probably trading with too big of a position size. So I would think about that a little bit. Obviously, it's never fun to be dealing with drawdown a little bit. But if you're holding on, right, to that baggage from the previous day, then you need to find a better process, right, of clearing your head post-market close and applying a 24-hour rule, right? No holding on to yesterday's trades, yesterday's fear, yesterday's win, right, and turning that into today's new problem. All right, each day should be independent of the previous one. Because if we're going to be overreacting or overcorrecting to the previous day, we're just putting ourselves on a roller coaster that's hard to get off of. Right? We get too much tunnel vision on the previous day. So spend some time reflecting on why you get that difference, right? Okay, got to break out here higher. Let's go. Come on. Let's go. So if that's what you're afraid of, right? Track in your journal, what are the things that would make it impossible for me to get a payout? What would be the things that put me further away from those objectives? And then compare how you're behaving to what those things are. Sounds good, Jeremy. Enjoy your day, man. And timing on this, not perfect. Down 150. Sounds good, Cordell. It's taking long. I mean, keep surviving worst case scenario. Again, trying to give this, to find that balance between giving it time, right, to break out and give you that move without also giving you time to drain your mental capital, right? There's kind of that fine balance here. 10-minute drawdown, probably a little bit more than one would like, right, objectively. So, like to see it start moving here pretty quick. Otherwise, I'll take the small loss. Come on. If it makes a new high a day, so above 62, I'm going to make sure that it closes above my entry price or I will get out. That's the current plan. Again, a slightly prematurely entry. It's made it maybe a little bit more challenging to be green than it should be. But let's see if this thing's now got some legs here. Okay, so now this candle has to close above my entry price. Okay, here we go. All right, so let's see if this thing can now keep pushing here. We'd like to see this go increasing volume as well, right? And I need it, find the right line, to close above high a day. We'll call it 862.25. If it closes below that line, I am getting out and taking my small win and resetting. If it closes above, then I can look for a continuation narrative and hopefully start to push this past 70. All right, so far so good here. That's 400 bucks, almost 500 bucks. Here we go. 650. So we're in good shape here, team. We are in good shape here all of a sudden, right? 675, 700. All right, beautiful. So we did a good job, right? Surviving that slight amount of chaos. We just continued to trust our thesis, right? Didn't get too emotionally attached. Now, the main concern here, right, I would say the biggest concern is that this breakout probably happened a little bit faster than you would have expected. Now, no reason to panicky, right? Increasing outlier volume, full body bullish candle. There's $1,000. Maybe this is giving me a chance to pyramid in here. So if I could pyramid in, let's see how this thing behaves. Might be able to buy a third contract. Stop loss would be 869.25 on my entire position. For now, let's see. Okay, that's definitely elevator up. No rush here, no rush, no rush. So every now and then, right, when you survive that worst case scenario, you can kind of expect that big breakout, right? Because if bears aren't strong and they're not good enough, what's going to change? So let's see if I can get a third contract in here. All right, so I do have a third contract. Average price $563.83. Stop is, we'll call it 68.50. So I'll just give myself just a little bit of an extra buffer here. Oh, and never mind. So obviously, guys, got stopped out protecting my position. Nice work, Patrick. Guys, I don't know how many times I have to respond to people about getting live market data. Sort that out, honestly. If you're not trading with live market data, don't expect you to be able to copy those positions, right? Like, holy smokes, guys. I don't know how to make that more clear. You have to have live market data. Jeez. Nice work, Rusty. So again, gave up a little bit on that trade, right? Absolutely did give up a little bit of that trade on that pullback, right? But that's the point of the pyramid. You set yourself up, right? If you're going to get good follow through, you maximize your potential. Worst case scenario, right? You get stopped out protecting your entry. And what's very, very important with these trades, right, is that you set your hard stop loss, because it is very, we'll call it tilting, right, to get stopped out or pull back after you've added a third contract and you see your P&L disappear. So what we don't want to do ever is allow that to then put us on tilt, right? So we have to protect ourselves from ourselves in that context and make sure that we're finishing green, right? So hard stop losses, pushing it up, right? Being deliberate with those entry prices. Stays at your current level, Gabe. Okay, and you can find these answers in their FAQ section. So please make sure you understand what you're purchasing before you purchase it. So we have a possible reversal scenario here now, right? Clearly on ES. So guys, if you're going to pyramid into trades, don't do it if you're not going to update your stop loss to stop you out at that price, right? Don't do that to yourself. Because all you do is, on the pyramid, right, if it goes against you, you give back your profits pretty quick. But you need to set yourself up, right, to protect yourself from the worst version of yourself. That trade, you should have given up maybe $300, maybe $400 maximum, right? A third of what your max P&L was at a point. Not more than that. So if we're putting ourselves in situations where on pullbacks, right, when we try to add in risk-free, we're actually increasing our risk because of our execution blinders. It's not going to work, right? You're better off to just close that position and not hold on for dear life, right? Hoping you're going to get bailed out. But good start to the day here, right? Very good start to the day. It's a little bit of a dirty fake out for sure here so far. That's okay, right? It's not personal. Okay, so update my notes here, right? I've got a full page of notes on this trade. So ES long at 58.60, 2 contracts, broke out higher than instant pullback under my entry price. Not a strong reaction post entry. 10 min of drawdown, but kept surviving pullbacks and worst case scenarios. Added a pyramid to get 3 contracts, but got stopped out protecting at 68.50. Moved to 70 happened quickly and on volume, so maybe more capitulation than continuation after surviving 10 minutes of drawdown. And I'm a big believer, right, that good traders are like good chefs. Good chefs clean while they cook. Good traders journal while they trade. So, okay, right? Nice little result. Good start to the day here. A bit annoying, right, to have gotten stopped out protecting on a pretty aggressive pullback here. So still looking at this as a possible reversal scenario. Right, if I said that, hey, maybe this was capitulation, right, on that breakout, maybe there's an opportunity then for that reversal. And if it's going to be a chop day, makes a little bit of sense. It's 10:38, so again, I don't have to force anything if something comes up. It's a nice green day, right? Just keep stacking them up, keep compounding away here. But we do have a possible setup to the downside. Nice work, Juan. You should be proud, man. That's a great job. So just to build off of that, we talked about this a little bit here now with this pyramid, but the point of that, right, is it only works if you're a good loser, right? And I don't think anyone is naturally a good loser. So the only way that you can actually set yourself up for that to be the reality is you put in hard stop losses, right? So there's multiple ways that you can do that. When you enter your third contract, right, make sure that you update that position to be, 68.50, I think was the number we talked about, right? So set your stop loss on that third contract, right, to be that number. And then you go into your previous order, go into your order window, and you modify your stop loss on your other 2 contracts, right? So that has to be the muscle memory. Expecting yourself to do the right thing as you're seeing your P&L decrease is a very bold projection, right? So we have to make sure that we're making it easy for ourselves to trade that risk-free. And there are going to be times where, exactly like today, right, we get that little pullback post third entry, or second entry, sorry, right, post third contract, and you give back some P&L. But we increased our potential of making significant capital while being at our biggest, right? We had a net risk of -5 points, right? So best or worst case scenario, I won on a 5-point trade, which is more than my 1R, right? So if I do that every single day, control those variables, I'll be just fine. When I skip those steps and ignore my processes, I get screwed. So if you don't feel like you have time, right, to modify your stop loss order, to set your new price, whatever it is, do not buy that pyramid contract, right? Don't buy that third one. Don't buy that fourth one if we ever get those opportunities. Because you're just going to give back your P&L when it inevitably pulls back. And you're setting yourself up for an operational failure, not a technical one. Right, so yeah, would have been nice to have probably closed it on that 70 breakout. Make the $1,000, you know, 1,200 or whatever it was. But I will always be willing, and this is just a me thing, to increase my position sizing without increasing my risk, and that's what I did there. Okay, a little bit of a nasty pullback. It happens. But still a great result and a pretty good day. DTR guests, for those of you who have been watching last couple days, last week, all of these ideas kind of making sense to you? I know I rant and rave like a lunatic, but hopefully these concepts make sense. Nice, Steven. Glad to hear. And yeah, this has been a really tough market, right? So the fact that we're just taking our base hits here short term, not a bad thing either. And all we're doing is trading our system. And we'll see if we can keep improving. And in the short term, I'll just keep eating my Reese's peanut butter cups and wait for the market to give me my opportunities. And yeah, if you guys are a guest, right, please don't hesitate to ask questions. Don't hesitate to do those sort of things. My job here is to help speed up that learning process for you as much as possible. And in general, if you have a question that is based on like my strategy or whatever, it's better to get that answered in the moment than it is to sit on that and hope that it gets answered in a month or in a week or whatever, right? The stuff that I get annoyed about, okay, I've got some of my own problems, but Like just getting market data, things along those lines. Like acting like your Best Buy Geek Squad's not really where my skill set is. So just ask that everyone takes care of those variables. But always happy to answer and talk about my trading, my background, my decision-making processes, all those things. So still possibly watching for this reversal scenario. It's not been super appealing yet. And Gabe, my go-to are the white chocolate Reese's peanut butter cups. And yeah, in the freezer. Woo, they're so good. We don't get Babe Ruths here in Canada, unfortunately, Joe. But that sounds incredible. And just to, I guess, reiterate, right, the value of following your plan. And I don't mean to rub this in anyone's face or anything along those lines. But today, you would have made money if you set your stop loss, right? Trusted your thesis before, and you didn't overcorrect or panic, right? Once things either moved higher or lower. You would have lost money, right? If you changed your thesis mid-trade. So, talk about it being stubborn, not patient. Today, kind of a variation of that here. Again, I'm not trying to rub that into anyone's face, but if you closed your trade early because you didn't like the way that it felt for whatever reason, write down why, right? In your journal. Why did you feel that it was the right decision to close that trade? And what was the symptom that maybe made you feel as if it was the right decision to close it early? Yeah, you gotta trust that process, but you also gotta build up that evidence sometimes for yourself where you have no reason to believe that trusting the process is different. Right? So, if you don't have evidence that trusting your process actually pays you out, then your default reaction is that, okay, The second it doesn't behave or doesn't give you that perfect reaction, you close it and you miss out on a nice day. Nice work, Jen. Congratulations. That was a tough hold. I mean, 10 minutes of drawdown to start the trade off. Doesn't feel great, right, objectively. But the thesis was strong. We survived our worst case scenarios. And okay. Taking a bit of a gut punch for 10 minutes to make 700 bucks. I mean, that probably makes more money than most UFC fighters, right? So, good deal. So probably at this time, right, getting less and less enthusiastic about this being a possible reversal scenario. Because it's being slow, right? So if we saw that maybe bears weren't defending these highs very well on that initial breakout here prior, right, to that 10 a.m. data. And then now we've gotten that rejection, but then they're not really sustaining that move here lower again. We're kind of just stacking up evidence that they're probably not as strong as we want. And they're just being, like they're the loud Halloween decoration today, right? They're not actually particularly intimidating. But they're just giving us jump scares. So, any questions here, team? Not sure if I'm really motivated to place any further trades today. Sounds good, Kenneth. Enjoy, man. Not really, Joe. It's too much noise, to be honest with you. Nice work. 525 bucks is a good day. Nice work, Joey. Awesome. Paying for that holiday on the first day back. That's a good feeling. I think that's going to be 12th green day in a row here too. So we're very quickly here stacking up those base hits, right? They're turning into some pretty tremendous. So 13. Cheers, Dwayne. So starting to turn into probably close to second biggest win streak of the year. And it's all just been about doing the boring basics well, right? We are not doing anything fancy. We're not trying to force any trades. We're just taking what the market has given us. And those base hits add up very, very quickly. I mean, if you average even $200 a day over 13 days, it's a pretty nice bit of P&L. All right, team. So final call for questions here. Final call for questions. Yeah, you too, Mike. Enjoy the rest of your day, man. All right, so time to fill in the journal here, right? And now I've got all my, written down notes, and I'm just gonna fill them in inside my journal, right? Add a bit of color. And keep stacking them up. Today is the 29th, right? All right, so that brings my total here to 214 trades taken on the year, 138 wins, 76 losses for an average win rate of 64%. And it's been awesome, right? We've done a really good job here in the last little bit, really controlling some of those variables, seeing steady P&L and account growth. And I've been thrilled, right, to see all of you also participating in many of those moves and getting great results yourselves. So for me, right, that's about as much of a win-win as one can get. And definitely proud of you all for improving, getting better, and also fighting through what this slog of trading conditions has been here in the last little bit. So congratulations to everyone. It's been a lot of fun. Appreciate you guys all sharing these experiences here with me. And let's keep stacking them up and compounding away here as what should hopefully become an even more volatile period as we not only get through some of these earning catalysts here in the next 2 or 3 days, but then also get close to what should be a pretty wild election period. So final call for questions here, team. Final call. Otherwise, looking forward to catching up with a few of you here in our 101s later this afternoon. And let's keep stacking up those wins. All right, team. Well, if no further questions, then same deal like always, right? Feel free to hit me up outside of market hours if something comes up. I'll do my best to get back to you as soon as I can. Otherwise, hope you all have yourselves a fantastic... Yeah, 100%, Joe. You'll have to set it up through trade copiers, but you can absolutely do that. No problems. Anything else? All right, well, I'm going to kill the stream here then for the day, guys. Same deal like always. Feel free to hit me up if you have any other questions. And for those of you who are DTR guests, thank you very much for tuning in. Hope you all have yourselves a fantastic trading session. Looking forward to having you all as a part of the team and working with you all on an individual one-on-one basis to help you all achieve your trading goals. Let's get started. Let's have some fun. Let's kick some butt. And let's keep kind of stacking up these wins as they show up. So have yourselves all a great day, and I'll see you tomorrow. Peace.